Welcome back. Today we're diving into something so massive that most people aren't even talking about it yet. Kaspa just experienced a catastrophic event, a $1 billion wipeout in mere minutes. And if you think you've seen volatile markets, brace yourself. What happened here dwarfs even the infamous 2020 COVID crypto crash. This isn't just another day in crypto, this is history unfolding. So, stick around because we're unpacking the full story. What caused this crash, how it unfolded, what it means for investors, and why some smart money might already be positioning for the next big move. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's start with the numbers. Last night, Kaspa's market capitalization plummeted from $2 billion to just $1 billion. Not over weeks, not over days, but in a matter of minutes. Imagine $1 billion vanishing into thin air like it was never there. That's not just volatility, that's chaos condensed into a short time frame. And while many crypto enthusiasts like to preach decentralization, events like this make you question it. One announcement, one statement from a high-profile figure can send the entire market into a tailspin. In this case, it was triggered by none other than former President Trump announcing a 100% tariff on all Chinese imports starting November 1st, 2025. The U.S. stock market didn't hold up either, shedding roughly $1.65 trillion in value. But the crypto market? It didn't just stumble, it tanked by about $250 billion. Bitcoin itself fell below $60K, and Kaspa got caught right in the storm. To truly understand the scale of this, let's look back. During the COVID crash of 2020, crypto liquidations totaled $1.2 billion. When FTX collapsed, the number hit $1.6 billion. And yesterday, according to Ash Crypto Reel, we saw $19.16 billion in liquidations, almost 20 times bigger than the COVID crash. Kas Network emphasizes that this event dwarfs every prior liquidation we've ever witnessed. Two groups emerge from such chaos: those who panic sell and those who see opportunity. The choice you make now could determine whether you're still in crypto a year from now or sitting on the sidelines watching others profit. Kaspa itself experienced a nightmare scenario. According to YStan, the price plummeted from 7.9 cents all the way to 2 cents. Some exchanges even reported lows of 1 cent due to liquidity constraints, exacerbated by a typically slow weekend market. But the story doesn't end there. After hitting rock bottom, Kaspa rebounded to above 6 cents, a massive dump followed by an equally massive recovery. Was this manipulation, a panic sell by whales, or simply market-wide liquidations catching everyone off guard? And here's the burning question. Did anyone manage to snag Kaspa at 3 cents? If you did, you're either incredibly lucky or perhaps had inside knowledge. So why did this happen? Let's break it down. Trump's tariff announcement triggered an immediate domino effect. The U.S. stock market tumbled, panic spread, and crypto followed. Bitcoin, Ethereum, and altcoins all felt the impact. Kaspa liquidations totaled $772,500 in just hours, $717K from long positions, and $55,500 from shorts. Bulls were decimated, shorts barely flinched, and retail investors found themselves questioning everything. One sarcastic meme summed it up perfectly. When Bitcoin drops, it's the future, but when Kaspa dips, suddenly it's a scam. Perspective, right? Despite the chaos, something remarkable happened. According to Kaspa Daily, Kaspa led the market recovery after the broader crypto sell-off. It became the top gainer of the day, outpacing many major coins. Investors began to see opportunity where others saw fear. Smart money started accumulating, and long-term believers continued holding, confident that over-leveraged liquidations were temporary. A keen observation by Mergelstwitold suggests that big players may be orchestrating this volatility. Retail investors are essentially visiting their playground. Liquidations are just the opening act. Cynical, perhaps. Plausible, absolutely. Amid the panic, some positive news quietly emerged. LCX published the world's first MiCA-compliant whitepaper for Kas and got listed in the official ESMA register. LCX is the first regulated exchange in Central Europe, based in Liechtenstein. This move positions Kaspa for significant institutional exposure in Europe, a long-term development that might matter more than short-term price fluctuations. Timing couldn't be more ironic. As retail panic sells, the foundation for institutional legitimacy quietly strengthens. Even in extreme volatility, technical analysis tells a story. Kaspa's chart suggests potential bottoming patterns, like inverted head and shoulders or double bottoms. RSI indicates oversold conditions, and bullish divergence in the MACD signals that smart money may be stepping in. Despite the panic, no major top signals have been triggered across 30 market indicators. This suggests that what we're seeing could be a brutal shakeout before the next upward move, not the end of Kaspa's journey. Kaspa's community remains active. Binance recently reminded users to nominate their favorite blockchain creators, and community members are rallying around Kaspa to ensure visibility. Collective action like this can shift momentum if the community participates fully. Meanwhile, developers keep building. Long-term holders maintain their positions, echoing the early persistence seen in Bitcoin and Ethereum during their formative years. Kaspa's development continues quietly. Jonathan Sam Polinsky introduced Terra, an AI-powered oracle designed to provide accurate information on Kaspa fundamentals. While still in development, Terra represents a push toward informed, fundamentals-driven investment rather than hype-based speculation. This aligns with Kaspa's broader vision to prioritize technology, transparency, and long-term value over short-term market swings. Right now, Kaspa sits at a crossroads. Fundamentals remain promising, but the chart looks weak. Holders are questioning whether to stay or exit. Analysts suggest the worst mistake would be selling out of frustration, only to miss out on the upside later. Historical parallels to Bitcoin's post-2017 consolidation highlight that accumulation phases often precede major breakthroughs. Kaspa might be entering such a phase, one that sets the stage for future growth while testing investor patience. So where does that leave us? Kaspa's $1 billion wipeout was historic, shocking, and scary. But amid the panic, we saw opportunity, resilience, and long-term vision emerge. The story isn't just about price. It's about community strength, technological progress, and strategic positioning. What we witnessed was a vivid example of crypto volatility, but it's also a reminder. Markets aren't just about fear. They're about perspective, patience, and conviction. Kaspa's journey is far from over. For those willing to hold, understand the fundamentals, and weather the storm, the future could be very bright indeed. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.